The market's demonstrated a lot of indecision over the past 2 months. First, because it was moving sideways, number one. And number two, notice on a daily basis, did a lot of dojis and little hammers and shooting star type signals, telling you there was indecision between the bulls and the bears. Well, the fact that they sold it off hard last Friday and then pulled it right back up most of that trading range on Monday tells you the same scenario. There's still a lot of indecision in this market. And if you look at the net result, we're still right back in practically the trading range that the market's been in for the last 2 months. However, a couple other added factors are that we did have a doji gap down, breaking the support level. We did have a bullish day, which could be construed as a piercing signal. However, as we know in candlestick analysis, we need confirmation. Tomorrow will be a very important factor as far as the pre-market futures are concerned, showing us what they're planning to do with this market. If they start trading it positive, this wiped out a lot of sellers. We could be in the wave 3. On the other hand, if they open it lower and start taking it down, not confirming the signal and still trading below the T-line, that tells us our downtrend is still in progress. That may not be able to, or I want to say, projecting which way the market's going because we don't know which way the market's going. It just tells us where we have high probabilities of which way the market's going based upon each individual signal. And utilizing the information of patterns, as we can see in our recommendation on V or CVRR coming out of this slow curve, and you can see the big fry pan bottom in progress. We were still buying, or we did buy calls and stock on Friday afternoon. Why would we do that? Because notice what was happening coming out of this pattern on Friday afternoon when the market was down approximately 400 points. They were still buying. This is the relevancy of a pattern. It tells you that something's going on in investor sentiment that has nothing to do with outside factors. This made for very profitable option trades as well as stock trades. That same analysis can be applied to our recommendation on CWEI. Notice the fry pan bottom, and it could never close. This is one of the simple rules of a fry pan bottom. You can stay long as they don't close below the T-line. Had a nice day today. Didn't really back off that much yesterday or on Friday with that big sell-off in the market. The fry pan bottom is the most relevant factor. And our recommendation on LMCK was based upon that same scenario, kind of a big fry pan bottom. And notice what happened on Thursday. They opened it way below the trading range and brought it back up into the trading range, creating a belt hold signal. Belt hold signal has very simple results. They've usually wiped out a lot of sellers, which means the next move is going to be fairly positive. So we were buying on positive trading today based upon that we have a fry pan bottom. We had a belt hold signal that wiped out a lot of sellers, told us the 50-day moving average was acting as support, and if they started trading positive today, they were breaking out into new territory, probably creating a wave 1, wave 2, going into wave 3. Candlestick analysis is merely just common sense analysis put into graphic depictions based upon what human emotions create as far as signals and patterns time after time. That'll be it. We'll see you in the chat rooms.